Good morning, everybody. It's Friday, June 30th. It's 5:31 a.m. Central Time. Brian Split, Mackenzie, good morning. Guys,
Good
we had
morning.
some, good morning. We had some nasty weather across the Corn Belt yesterday. Let's start off there.
So, yesterday's Corn Belt rain event was associated with hurricane force winds. This latest DERECHO event produced winds in excess of 80 miles per hour across parts of the Midwest yesterday. Damage to crops and grain storage facilities was mostly notable in Illinois. Multiple tractor trailers were blown over on Interstate 57, about 140 miles south of Chicago. Wind gusts up to 70 mile an hour reached as far as the Indianapolis International Airport and perhaps further. Another round of severe storms is possible here tonight.
Yeah, so there's going to be more of this tonight. Brian, our very own friend, Matt Bennett, posted this on Twitter. If you guys are watching on YouTube, some nasty, terrible damage to some storage facilities. And there was a lot more of that. I think there was crop damage. I think there was damage to storage facilities. There was some rain here also. What do you make of this?
You're going to see quite a bit of crop improvement where they got rain and there wasn't damage.
Yeah.
But we saw this 3 years ago. It was August, so it was a little bit different in the development stage for the crop. But it did do damage to any bins that had grain that were stored in them. That grain was lost, and it did damage to the crop itself. So I do think that this is something that potentially has a similar effect, maybe to a lesser extent, just because. And I'm not an agronomist, so I don't know. What is it? What is the damage of the plant gets knocked over at this stage versus maybe grain fill, right? Which is what's happening in August. But it had an impact. The market opened up higher immediately last night, and we've been able to hold most of those gains.
Do you think the market's actually higher on this? I feel like the algorithms have an algorithm for rain and for drought and for other things, but maybe not for a derecho. My thought was that, like, I know in 2020 when this happened, this was August, like you said, the market didn't really react to the wind damage. It wasn't until like later that you found out that there was such a substantial amount of damage in Iowa in particular that we saw like the market reaction. I looked at the move this morning and I'm wondering if that's why. Like, is that why, because we saw crop damage, or is it because we've got a report today and month end and quarter end and weather and we just saw a big sell off? I mean, you could probably argue either way,
Yes.
right?
Right. The answer is probably yes. And maybe the participants learned a little bit from 2020.
Very
right.
possible.
So that was a very delayed reaction. And then we found out after that, oh, wow, that actually did have an impact on things. So maybe because of that 2020 event, they were a little bit more willing to jump in and make a move quicker. But yes, it's the end of the quarter. We've just seen corn break $1 in a week,
Yeah.
and we have that report today. So I don't doubt that is also part of it is some short covering and some profit taking on the short side of things before these numbers drop.
For those of you guys watching on YouTube in particular, this just happened less than 24 hours ago. So if you're in one of these areas that was affected by this thing and you have damage, drop it in the comments and let us know what happened. How widespread was the damage? What sort of damage do you see? What do you think this means for the crops? To give you guys a brief history of recent derecho events. So the 2020 derecho was August 10th. The one before that was in 2012, actually exact same date, June 29th. And this was more confined to like the Eastern Corn Belt and the like almost into the East Coast. And then you had one way back in 1998, which was early. This one was in May 30th and 31st, and it was kind of like the Great Lakes region, I guess. So this has happened before. You've seen crop damage associated with this before, most recently in 2020. So we'll see what happens. Let's get to the weather here.
So, along with the extreme weather yesterday, rain fell across the Corn Belt. The same band that saw heavy winds also saw up to 1.5 inches of rain locally in Illinois. Parts of southwest Indiana perhaps saw the heaviest amounts. More rain is expected here today. A storm system pushed across eastern Nebraska and into western Iowa this morning. A big chunk of the Corn Belt should see additional rain over the next 72 hours. The longer-term forecasts continue to indicate a shift toward a wetter pattern in July.
All right, so we've had some damage here, but at the same time, these are the rains that we very desperately needed to see across these central areas of the Corn Belt. So all in all, Brian, the rain event is a bearish thing, even though it produced some damage.
Net improvement, I would believe,
Yes.
would be the case, correct?
Yes.
And So the question then is, with the market breaking $1, how much of this rain have we already paid for?
Yeah, that's the question. And is it how much have we paid for, and also what are we paying for in terms of future rainfall? Because these maps, like I mean, your GFS model, your Euro model, it doesn't matter which one you look at. They're all indicating a shift toward a weather pattern during the month of July. You pull up those 6 to 10, 8 to 14-day government maps, it pretty much says the same thing. So I don't know. Today could be an interesting day. We got a report. We'll talk about that in a second. You got, again, month end, quarter end, weather. There's a lot going on today. If you guys are interested, real quick plug here, we do a pre-open weather update on Sunday, and weather's going to be a big deal. Whether these rains hit, miss, bust, whatever, check that deal out. Go to Standard Grain. You can sign up today, and we'll send you out all that info. Let's get to some other biblical type weather stuff here.
So, a heat wave in the south and smoke-filled skies in the north are impacting the weather. Another round of Canadian wildfire smoke has made its way to the northeast and midwestern sections of the U.S. The air quality in various parts of the Corn Belt, such as Iowa and Illinois, was classified as unhealthy on Thursday. Meanwhile, states in the south are dealing with a heat wave that has engulfed the area for almost a month. On Thursday morning, there was an excessive heat wave for more than 82 million people down in the south.
What do you think about the smoke? I've heard that the smoke is going to be a bad thing in terms of crop development, and I don't know that for sure. I don't know how severe it is. I don't know if there's precedent for this sort of thing. What have you heard about this, Brian?
Yeah, I think so. Going back to the derecho, we have an event that was within recent history that we kind of learned a little bit from. I don't, like you said, I don't know if we have precedent for smoke. I know,
I don't know either.
there's been talk about, hey, when a volcano erupts and there's that in the sky, and it can affect photosynthesis, and maybe there's some merit to that with the skies, as cloudy as they are with the smoke, that there's going to be an impact on the potential for the grain. I think there's definitely some potential there, but I don't know. It may not be something that we actually see in the marketplace, if at all, directly correlated to this till later in the year. Maybe it's in fall or even in January on the final production report where we see the potential impact of that. But I don't know that that's something where the USDA is going to say, hey, there's all the smoke out here on the July WASDE report. We're going to take yield down by 2 bushels an acre.
Same deal here, guys. If you have thoughts on this, if you know more about this smoke situation and what it means for crop production than we do, drop it in the YouTube comments here. Be happy to hear anything you guys have to say.
So USDA will release its planted acreage and grain stocks report here this morning at 11 a.m. Central Time. Ahead of the report, traders estimate that U.S. corn acreage declined slightly compared to March intentions. Soybean acreage is thought to have risen slightly. June 1st stocks of corn, soybeans, and wheat are expected to be down compared to the same period last year. This report is often associated with a significant degree of market volatility.
I don't know. It is associated with volatility. I don't know if I'm feeling the volatility today, though, Brian. I don't know. I feel like we've already seen so much this week. I mean, anything's possible, but.
Yeah, and so, as far as the acreage numbers go, the guesses versus March are for very small departures.
Pretty plain vanilla stuff here.
Yeah, so if that's the case, I really don't see much of an impact there. But that, just because those numbers are so close to the March numbers, does open the door for surprises there.
Yes.
I kind of thought that maybe we would see corn acres go higher, but I know our internal number for agmarket.net, which you went over with Matt Bennett, was for corn to come down a touch. I was just always taught that when we plant early and plant often, that the number might grow, but we'll see how that plans out. As far as the stocks thing, that's generally, if you find or lose 100 million bushels of corn, that is a right here, right now issue where either those bushels are here or aren't here. So I tend to think that usually if we're going to see a market moving event, it's going to come from the stocks. But I do think because those estimates are so close to March, that does open up the possibility for a surprise on the acres.
Yeah, everybody watches the acreage numbers closely, but it seems like the stocks maybe have the ability to move the market more so. I'll tell you this. You want to see D's corn south of $5 again, print a 93 on the corn acreage number, and that'll that'll do it really quickly would be my guess. What do we got next?
U.S. corn export sales are still poor. Net corn sales of 140,400 metric tons for the current marketing year were up noticeably from the previous week. However, they were down 16% from the prior 4-week average. Accumulated corn sales for the current marketing year are down 36% compared to the same period last year. Net soybean sales of 227,400 metric tons for the current marketing year were down 50% from the previous week and down 28% from the prior 4-week average. Net wheat sales of 155,200 metric tons for 2023 through 2024 were up 41% from the previous week.
Brian, I have a couple of statistics for you regarding new crop corn and soybean export sales. The new crop book of corn sales totals 3.2 million metric tons. It was 6.4 same period last year. We're half of where we were last year. New crop soybean sales are even worse.
Oof.
3.4 million on the books for new crop beans. We were 13.5 million. We're off 75% in new crop soybean sales versus the same period last year. China canceled new crop beans. Net reductions from China of 3,000 metric tons last week. This is a dumpster fire.
So I think what we are seeing in beans, that severe discrepancy year over year, is due to that big Brazilian soybean crop.
Absolutely.
And so I think we can then extrapolate that forward and say, all right, look at this large safrinha corn crop, and corn exports year over year aren't behind as much as bean exports, but maybe we're heading in that direction with the bean pace of new crop sales on the book as kind of the cue for that.
The China deal. So the reason why corn export sales are down so drastically is because we're basically back to like pre-China buying times in terms of the pace. So China didn't start buying U.S. corn in any sort of material amount till like mid 2020, and that's when we started to see it. We saw 3 years of it, and now it just kind of disappeared as quickly as it showed up. Where soybeans, China's been a more reliable buyer, but they haven't been in for nearly as much this year. I believe the statistic I had in our email this morning was that in terms of the new crop soybean book, this is the second worst since 2006, and only 2019 was worse, and that was when we were in the trade war with China. So it's not. We need to find some demand here.
Yeah, and I suppose there's two angles to that. It looks horrible right now, but does that mean that there's that much more buying in front of us? Possibly.
Are they waiting for sale prices? They're waiting for bargain bin
Right.
discount levels, maybe.
Waiting for harvest low prices, possibly. But if that is also the case, I had a client say, well, they're gonna come in here when the Brazilian crop dries up and it's not available anymore, and maybe that's come fall. But if that's the case, does that mean there's only going to be 3 or 4 months of strong buying, and then it's right back to the Brazilian soybeans again? And I think I was reading that they like to buy Brazilian beans because the oil content is lower and they're drier, so they store better than U.S. beans.
Yeah, so the situation's not good. It's early. There's plenty of time for it to improve, but as it stands here today, it's not good. Now, we do still have a drought.
Yeah, we sure do. USDA released weekly drought monitor data yesterday. 53% of the contiguous U.S. is in some level of drought this week, down from 56% last week and 69% last year. The majority of the Corn Belt saw drought conditions stay the same or worsen this week. One bright spot was Ohio and Kentucky, which saw heavy rains leading to drought improvement. A large portion of the Great Plains region, excluding eastern Nebraska and eastern Kansas, saw conditions improve thanks to widespread precipitation. So when we look at the percentage of U.S. areas experiencing drought, 70% of corn country is in some level of drought, soybean 63%, winter wheat 55%, spring wheat 15%, and cattle country 41%.
So the improvement was in like these outside areas of the Corn Belt, but actually it got worse in the central Corn Belt. But that's where we've seen the rains here just the last 24 hours, and there was some last weekend too. And we're supposed to see more rains here this week. So this is still, a situation where I think you need to see additional rainfall, certainly even beyond what we had over the weekend, yesterday into today. You're going to need to see this wetter pattern that forecasters or models are talking about kind of continue. We still got a drought to alleviate here.
Yeah, and you think about last year, and one of the things, it was dry for a while, but then we had timely rains, but we also had quite a bit of subsoil moisture going into the growing season. We don't have that this year. So the timely rains are going to be even that much more important. But I think the way that the system that we had came through, it's got the fund manager with the idea that the pattern has shifted. And I think it makes it a little bit more believable and more believable than, several weeks ago when these patterns were not validating that when we've got rain in the forecast now, they're going to start trading it more aggressively.
Yeah, a couple weeks ago when there was, no shift of any kind in the forecast that was tangible, there was no floor to the U.S. corn yield. It was how bad could it get, And now that you've got some rains, maybe there is some sort of psychological floor in terms of how bad the crop can get. I don't know where that floor is or what people think, but that seems to be like the general consensus as of right now. Cattle were higher again yesterday.
They sure were. Feeder cattle futures closed an average of 141 higher. They were up anywhere from 90 cents to 212. Live cattle futures closed an average of 43 cents higher. Cash cattle trade has been incredibly light this week. There were a few live trades in Nebraska at 182 on Thursday. That was down from the week before when cattle sold at 184 to 185. Earlier this week, fat cattle in Kansas sold for 178. That was down $2 from the previous week. Choice box beef ended the day on Thursday at 328.05. That was up 15 cents. Select ended the day at 297.18. That was up 50 cents.
Hey, Brian, you're a chart guy. That feeder cattle chart looks like Swiss cheese with all the gaps on it. What do you make of that sort of price action?
So gap, I'm talking maybe August feeder cattle gapped lower twice and then gapped higher twice at the same levels. And that to me looks very strong. So I'd be looking for a third gap, which is generally going to be called an exhaustion gap. So if we have another third gap higher, that might be high, close to the high for this particular move. When I look at the December live cattle chart, it looks like we broke out to the upside of a bull flag pattern. And the measurement of that bull flag would, I believe, take us to maybe about 193. Ooh. So, that would suggest we're going to see new contract highs and then some by quite a bit if that's the case.
No trade wrecks here, guys. No trade wrecks, just ideas. Outside markets this morning, U.S. dollar's up a little bit. The S&P's up 18. Dow Jones up 100 points. Crude oil down 8 cents at 69.79. Remember, report today at 11, guys. Brian McKenzie, have a nice weekend. We'll see you guys next week, all right?
Sounds good. Thanks.